When you look at oil price actually slumping to a 3-month low last week, what has been the biggest impact, Toril, on some of these prices? Is it weaker demand or higher supply?
I think it's a combination of both. We're seeing, obviously, the macroeconomic sentiment is deteriorating. There's a lot of concern about interest rates and slowing growth. But what we're seeing is that oil demand is actually holding up strongly and exceeding expectation, as we note in our last report, especially China going from strength to strength. In September, Chinese oil demand was at another record high, above 17 million barrels a day, despite the bleak economic outlook. And we're seeing also, as you note, that supply from non-OPEC producers are exceeding expectations, with strong growth from the United States, Brazil, and other countries. So a combination of the two has eased the tensions in the market for the time being.
So, Toril, when you look at demand, has demand gotten worse recently? And if yes, where?
We are seeing some signs of demand destructions. As I note, China and the U.S. has held up relatively strongly despite the economic outlook, but we're seeing signs of slowing demand, especially in Europe and also in OECD Asia Pacific, where in the third quarter demand fell by more than 500,000 barrels a day. We're also seeing signs of weakness in a number of African countries and globally. So really, the strength that we're seeing in demand at the moment is concentrated in a handful of countries. China, India, Brazil account for more than 90% of growth in 2023, and China by far the biggest contributor with more than 3/4 of the growth. So a handful of countries are driving the strong demand rebound that is coming out of the COVID pandemic. Jet fuel, China is driving growth, and weakness in a number of other countries.